The CBOE 10-year U.S. Treasury yield index on the monthly chart shows it just about nailing this horizontal line going back to the '09 Great Financial Crisis era. Had a close of 3.51 or so, and get a move down under that 3.5 line there. And then the simple moving average 12-month is right there in blue. And then this downtrend line here is right near there. And then the downtrend line going back to 1980 is at 2.614 or so right there. And the RSI 14 line here is starting to look like back here in 79.80, where it stayed above 70 very strong for a long time, and then it took a precipitous drop here in 1980, right in the middle of the year. It went below its 21 EMA signal line back then, and we're just fast approaching that now. And the MACD had a precipitous drop after it went under the 21 EMA signal line and nailed its signal line here in red, and then shot back up again, and it went back into the strength area above 70 for the 10-year yield. And I am not sure, but this could have been that area where the Fed, who was it at the time, Volker, let loose on the tightening here, and inflation started rearing its ugly head again, and then he had to tighten up again. So that's the thing that the Fed has been talking about trying to avoid, is this right here. So I do not expect it to go down that far. It might go down to the 21 EMA signal line, a little bit less, and then turn around and go back up into the strength zone above 70. That's my prediction. And it looks like the MACD signal line in the current area is a lot closer to the MACD. And let's put the cursor on. So let's just say that is the peak over there in current price. I have the cursor over here in 1980. And it looks like, no, it's not that much closer in the current area than back here. So it's very similar to the Volker area. You know, if any similarity, the MACD for the current area here is not as high as it was at the peak back here before it started going under. So there might be more room to run to the upside. I don't know. Depends on what Powell's going to do, and he wants to stick to his guns. So the short-term interest rates are definitely going to be going up further. And I suppose it's all boiling down to the fact that the markets don't believe that he's going to be able to hold it there. And that's probably why the 10-year is sinking a little bit.